Hi, I'm Patrick Reed from the Adams Principle. Just got a bunch of charts for you today. Some really interesting moves, mainly because of the anticipation of a rate cut. Talk of 50 basis points in July. Cold water got thrown on that just recently from Bullard, of all people, the ultra dove. Maybe he's throwing a bit of common sense onto the rate crowd. Maybe not, but let's just have a look at the first slide, dollar index. Slight reprieve. As you can see, it's just been hit left, right, and centre. We have been in the last week and a half, we've been a lower dollar and a higher risk narrative been playing out. 96.45 has been capped though. The big level to watch out for 95, the figure, to 95.15. This is an absolute marine for us at the Adamas Principle. Lots of reasons why. There's a 200-day moving average, sorry, 200-month moving average down there, and it's a double bottom as well. So at the moment, we've been talking about a bit of a squaring into G20 at the weekend. So be careful of a bit of a dollar squeeze. Just after G20 meeting, if a deal gets done, this means potentially a rate cut could get kicked into September, and obviously dollar index will lift. So the next slide we've got is Eurodollar. So we've been telling a lot of our clients about 111.85, technical dream, absolute dream, and look, it worked like a charm. Top side 114.50, big fib level there, and obviously Bullard. Recent comments on Bullard throwing a bit of cold water on the 50 basis points cuts, which, let's just be clear, is absolute insanity with equities this high. Just want to clear that right up. I'm not saying it. I personally believe it's not going to happen, but it might happen. If it does, I don't know how equities are going to react. May not be too good because sometimes rate cuts mean risk off, because the Fed's worries, but it all pivots on this weekend. So Eurodollar downside, obviously 112.70 and 112.40 area, quite cheeky down there. But at the moment, it's kind of holding, and 114.50. I doubt it's going to get higher than that before the weekend sets upon us. So the next slide is the S&P. You can see those comments having a negative effect, but we're still at elevated highs. 29.50 failed with the Fed talk. 28.97, 28.75, not bad down there, but obviously it's always good to look at the Dow and the S&P in risk terms, in currency risk terms. And finally, my favorite pair, really, if you're going to trade the weekend, just be really, really careful. But Aussie yen, my favored risk, my G10 risk currency pair, above and beyond anything else. In brief, you've got Aussie, which is by far the best proxy for China. You've got comms elevated, which drags down the dollar, obviously lifting the Aussie dollar side of the core, the first leg of the core. And then let's just look at dollar yen of the core, which really is key. Now, dollar yen has a lot of things moving it. You've got 10-year yields, you've got stocks, you've got like I say, broad yields, but you've also got the dollar play, and then lastly, you've got the yen play as well. All of this is quite difficult to navigate. If in doubt, just stay out. That's what we're saying to our clients. And I ultimately see if we do get a risk without any caveats, which, let's face it, is going to be a dream. I like to dream. If we do get any risk without any caveats, then I see Aussie yen probably the recipient of the larger of the moves higher on balance, even though dollar might be a bit lower because of the rate cut in OIS getting kicked out. I do see Aussie dollar higher and as a result dollar yen higher, because that will be a slight Goldilocks. So if in doubt, stay out. These are a few slides and our view from the Adamas Principle. My name is Patrick Reed. I hope it's been helpful. Thank you very much.